Call it irresistible. In the U.S. alone, the ETF market is well above the $1 trillion mark and rising. What's driving ETF growth? One expert says the key factor is fairness.
I think people need to understand that ETFs are probably going to continue to capture increasing market share in the overall mutual fund business for the simple reason that they are really the fairest method for all shareholders concerned. The reason ETFs have this advantage is that unlike a conventional mutual fund, when somebody buys a regular mutual fund, they force the portfolio manager of that fund to buy new shares, and that incurs transaction costs. You can think of it as friction on the portfolio, and those costs are borne by all of the shareholders of the fund. With an ETF, that doesn't happen. And so the manager doesn't have to worry about whether one class of shareholders, let's say active traders, is disadvantaging another class of shareholders, let's say long-term shareholders. And that's really the problem the ETF solved, and it was really ingenious, and it really, in my opinion, goes a long way towards explaining why they've grown so rapidly.
At an industry event in San Diego, Herb Morgan called it a process of evolution. He says ETFs are simply, as he put it, faster, better, cheaper.
It continues to experience accelerated growth, that sort of hockey stick growth that we all like to talk about in our business. I don't see it slowing down anytime soon. In fact, I think you're going to begin to see some cannibalization of the old style 40 Act vehicles to what I call the new style, faster, better, cheaper 40 Act vehicles called ETFs. I think the growth of ETF assets in the last 10 years has been remarkable. But the next phase is going to be the growth of ETF managed account programs. They grew 60% in the last 12 months. That just ended 12/31 of 2012. And I expect that very accelerated growth rate to continue for at least the next 5 to 8 years.
FlexShares exchange-traded funds is part of the growth story, attracting over $3 billion in assets in the past year and a half. Success is attributed to an investor-centric approach.
I think the first thing that's really resonated in the marketplace broadly, and then with investors specifically, is really our value proposition or our approach. So what we like to say is we really surround ourselves around the investor, or start thinking first about the investor and what is the investor trying to accomplish. And so in doing so, we explicitly came up with a pretty basic or fundamental framework that says investors are looking to do 4 things. They're looking to grow their assets, capital appreciation. They're looking to manage risk. Those risks can be specific risk or composite risk. They're looking to provide liquidity in a portfolio. And then finally, they're looking to generate income.
The proliferation of ETFs is really only limited by the number of asset classes that can be identified that are liquid and therefore can be wrapped into an ETF structure.
Last year, ETF net issuance jumped 60%. Going forward, we'll see if the pace remains strong. This is ETF Newsline. Thanks for watching.